Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In this video, we explore why investing in new typewriter manufacturing is a high-risk move this year. The clack of metal keys hits a nerve. Nostalgia sells. But nostalgia rarely pays the bills. If you are eyeing a factory for typewriters this year, pause. This video gives a clear answer for angel investors, small funds, and owners flirting with a retro hardware play. The short version: typewriter manufacturing investment this year is a poor bet for most portfolios. The reasons are simple: tiny demand, rising costs, strong tech headwinds, and weak margins. You will also find better ways to ride the retro typing wave with less risk. We will cover refurbish and resale, mechanical keyboards, rentals and events, and small licensing plays. At the end, there is a quick due diligence checklist you can use before funding any niche hardware deal. Is typewriter manufacturing a good investment this year? Short answer: no. Let the verdict be clear. Starting or scaling a new typewriter plant this year is a bad use of capital. The category is driven by collectors and hobbyists, not broad consumer need. Most modern workers live in cloud tools and mobile devices. Paper has left the center of daily work. On the demand side, the typewriter market size is small and scattered. Schools, offices, and governments do not buy these in volume. Viral moments pop up, then fade in weeks. Used inventory is deep and repairable. That keeps new unit sales low, even during trend spikes. Costs rise while pricing power stays weak. You will face small batch runs, custom tooling, scarce parts, and a shortage of people who can assemble and tune mechanical machines. Metal, shipping, and insurance costs keep climbing. You cannot push retail prices high enough without shrinking a tiny buyer pool even more. Tech trends are not on your side. Laptops, tablets, and AI writing tools eat the core use case. Remote work demands editable, shareable files. Mechanical keyboards and distraction blockers give the sound and feel, without losing digital speed or storage. Margins stay thin and moats are weak. You are squeezed by refurbished units, cheap imports, and decades of used supply. Designs are easy to replicate, and new patents will not protect a classic mechanism. Service networks are hard to build. Returns and repairs consume profit. Shipping heavy metal machines adds costs and damage risk. The moat is shallow, and the math stays tight. Demand is tiny and fading outside collectors. Most buyers are hobbyists, collectors, or artists. They want a conversation piece, not a daily tool. Schools and offices do not rely on typewriters for normal work. Social buzz can spike demand, but the bump is brief and hard to plan. The used market is huge, and many machines are repairable with modest work. That supply soaks up interest that could go to new builds. New production struggles to find steady, scalable volume. Costs go up while prices cannot. Small batch production drives unit costs up. You need tooling and dies for precision parts, often with minimum orders that tie up cash. Skilled labor is hard to find, and training takes time. Metal prices and logistics have climbed, pushing cost of goods higher. You cannot raise list prices enough to cover it without shrinking the customer pool. The more you charge, the more buyers shift to refurbished machines. Tech trends crush the use case in homes and offices. Laptops, tablets, and phones dominate writing. Cloud storage, collaboration, and AI tools handle drafting, editing, and formatting. Remote teams need digital files, version control, and sharing. Paper-based output does not fit that workflow. For the tactile feel, mechanical keyboards pair clicky switches with digital speed. They scratch the itch without the pain of ink ribbons and hard copy. Low margins and weak moats. Margins get squeezed on both sides. You compete with refurbished units, low-volume imports, and a flood of used machines that can be serviced. Designs are easy to replicate, and new patents will not protect a classic mechanism. Service networks are patchy, so returns and warranty work hit hard. Shipping heavy metal machines adds costs and damage risk. The moat is shallow, and the math stays tight. Smarter ways to play the retro typing trend without owning a factory. The retro typing trend is real, but you do not need a factory to join it. Focus on asset-light moves that turn nostalgia into steady cash flow. The retro typing trend supports services, accessories, and content far better than industrial tooling. The mechanical keyboard market is healthy and growing compared to new typewriter builds. A vintage typewriter business can work when it favors refurbish and community, not heavy capex. We'll dive into smarter alternatives next. Stay tuned for part 2. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.